I'll get that changed for next time. So folks, welcome to this brown bag session. All of our brown bags, as we mentioned previously, will be on Zoom. Some of our Form 1040 tax layer trainings will be available in person. Consultations will be available in person and online. Just trying to meet everybody and make this accessible to as many folks as we can. So today our topic is going to be on filing requirements and filing status. And this will take a little bit of time to cover. So, but we're still going to honor having you back to work by 1 o'clock this afternoon. So specifically today, our topic is going to be who should file, and then how do we determine filing status. Our references are going to be out of publication 4012, the tax resource, section A 3 through 6, and section B 12 through 15, as well as publication 4491, which is your tax law guide, and that is going to be tab 3.1 to tab 4.9. And then also we will be using the intake, interview, and quality review form, which is form 13614C. All right, so filing requirements, it's all covered in that 4012 tab A of who must file. There are other situations where people may want to file if they owe any special taxes, they've received a health savings account distribution, they have self-employment earnings of at least $400, and if they were in the marketplace with health insurance, and so they would be eligible for the premium tax credit, so they would have received Form 1095A. So the chart that we always kind of look at is in the 4012 guide, and it has the filing statuses along the left-hand side. And then at the end of 2023, the middle column were you, and it's based on age. So, and then it's based on if your gross income was at least. So if I'm under 65, I must file if my gross income was $13,850 or greater. If I'm married filing jointly, then I have to file if my income was over 27,700. Married filing separate, that's basically for any age, any dollar amount. Head of household, that is under 65 and income higher than $20,800. And then qualifying surviving spouse. For some of us, when we started doing VITA, this was qualifying widow or widower. So this, they have renamed that category, and I like this. I think this is a more inclusive name of qualifying surviving spouse. And so they can, for the first 2 years, take the 27,700. And what you'll notice on the numbers that I read from single through qualifying surviving spouse, that is actually the standard deduction. So those were significantly increased to this year for individuals under the age of 65. So situations when people who are not required may want to file. Anyone that had any federal or state tax withholdings, well, we want to get that money back. And I know that the feds have a certain amount of limit for a refund that they'll send a check. And I think the state of Nebraska also have a threshold of a refund that they may not send a check.
Like a couple dollars or so, I think. Is that what you're?
Yeah.
It might even be $5. I think I know there is a number. I forget if it's $2 or $5, but
that's what I was thinking.
Yeah, I used to know, but
well, we don't see it often anymore. But yeah. And so if they don't, that money is rolled over into certain state initiatives or federal initiatives. So the money, you can think of it as a small donation.
Yep.
If estimated tax payments were made, If that individual qualifies for earned income credit, child tax credit, child independent care credit, American Opportunity Credit, premium tax credits, which again, the health, the 295A, recovery rebate credits, sick and family leave credit. And we'll talk about all of those credits later on in these sessions to learn more about those. And then also, if you want to file to receive other forms of assistance, such as the FAFSA, if you have, or someone has a student that is applying for student loans to go to college. Also, we will have several elderly or older adults who will come in that may not have a filing requirement per se based off of income, but they need it, they want to have it, they've always done it. They may need to show that they have zero income for different programs and different things like that. And it counts for a return on our end, which is useful. So children and other dependents. And I think here we're going to go into this more later, but unearned income, earned income, and gross income, kind of there's some quick definitions of those on the left-hand side of your screen. But unearned income is taxable interest, ordinary dividends, and capital gain distributions. That's unearned income. It also includes unemployment compensation, taxable Social Security benefits, pensions, annuities, and distributions of unearned income from a trust. Earned income, which a lot of our credits are based on, are salaries, wages, tips, professional fees, and taxable scholarship and fellowship points. Gross income is the total of your unearned and earned income. Now, something I want to call your attention to, if a scholarship is not reported on a Form W-2, then it is considered to be unearned income for the purpose of calculating kiddie tax. And we'll talk about that in the next slide. So we have another handy dandy chart on the right-hand side of the screen that will talk about if you're either 65 or over or blind, you must file a return if any of the following apply. Your unearned income was over $3,100. Your income was over $15,700. Your gross income was larger than of $3,110, or your earned income was larger than $13,450 plus $2,250. Now, the good news is if we put everything correctly into TaxSlayer, our software that we use, all of this is going to be calculated for you. This is just good to kind of have an idea going in as to age, different scenarios to where, and that children and other dependents will still have a filing requirement. All right, so we've kind of hinted at this kiddie tax. Kiddie tax is out of scope for us, but I do want to bring our attention to this because we do a lot of scholarship income, and if it's not reported on the W-2 and it's reported on a 1099-8T, the tuition statement, then it could be that their scholarship income could be considered unearned income if it's over $2,500 and the child is under the age of 18. So just something to keep an eye out on. Rarely do we see this anymore, but it might be a possibility. So if something comes up on TaxSlayer saying kiddie tax, you need to fill out Form 8615, you know what it is related to. All right, other situations when you must file. And I'm going to only highlight those that are in scope. So if you owe any special taxes, including any of the following, additional tax on a qualified plan, including an individual retirement arrangement, an IRA, or other tax favored account. But if you're filing your return only because you owe this tax, you can actually file Form 5329 by itself. Rarely have I seen this. 1D, Social Security and Medicare tax on tips you did not report to your employer or on wages you received from an employer who did not withhold these taxes. Recapture the first-time homebuyer credit. I love this. See instructions for Form 1040 Schedule 2. I don't know how many of you remember the first-time homebuyer credit between 2008, 2009. It was 10 years. It should have all been paid back, but people could ask for forgiveness in a year, knowing that it was continued to roll over. So you will still see people who will say, I need to pay my $500 for first-time homebuyer credit. Okay, so then write-in taxes, including uncollected Social Security and Medicare, the railroad retirement tax tips. You reported to your employer or in group life insurance and additional taxes on health savings accounts. 2, that one is out of scope. 3, you had net earnings from self-employment of at least $400. Net earnings are Schedule C profit times 92.35%. There is no self-employment tax on a Schedule C profit of less than $433. But if anyone said, I made $400, we need to find out if that's other income or if that is some type of a self-employment venture. Advanced payments to the premium tax credits. We'll take a look at where we see on the intake interview quality review form where they check whether or not they're receiving a 1095-A. But typically is, do you receive health care through the marketplace? And as soon as they say yes to that question, then you need to be looking for the 1095-A. And then the last one is out of scope as well. All right, so who should file? Even if the taxpayer is not required to file, the things we just talked about, they should file if they've had income tax withheld from pay, pension, Social Security, or other income. Odds are they're going to get that money back or a part of it. If an individual made estimated tax payments for the year or had any other overpayment from last year, estimated tax applied to this year's taxes, they qualify for the earned income credit, they qualify for additional child tax credit, they qualify for the refundable American Opportunity Credit, they qualify for the premium tax credit. They receive a 1099-B and other proceeds plus other income exceeds the limits of filing chart in Chart A. They received a 1099-S proceeds from real estate transactions. And then you are required to file, if you are required to file a state return. Now, we talked about it, sometimes people will come in and say, I just need to file. I haven't withheld anything to get that back, but I need to show someone a tax return, let's say to a potential employer or to someone they're seeking different resources. So we can go ahead and do the tax return for them. And then what we do in order to e-file those returns, we enter $1 in as other income or as interest. And this is something in the 4012 guide you can find within the taxpayer pages. And then out of scope is 11 and 12. So they qualify for refundable credit for prior year minimum tax, individuals, estates, and trusts, or they get a credit for federal taxes paid on fuels. So Form 4136. All right. Questions on who should file? Stop share for a second. Probably this information doesn't surprise anyone. It's quite a few of you have VITA experience. You're in the Department of Revenue. You're in different divisions. You're seeing these things on a regular basis. But if you have questions as we go through tax filing season, please let us know, because no one tax return is the same. And so just because you've done 10 returns and it kind of all fell into a pattern, it doesn't mean the 11th return or the 12th return, there's going to be something funky with income that some of these other rules that we're talking about might apply. And that's where you want to work with your site coordinator on. If they don't know the answer, which is really rare because we have quite the veteran crew of site coordinators, they'll contact myself or Kyla or Anna. If we don't know the answer, then we're going to contact our IRS relationship manager, Mark Munsterman, to get an IRS answer. And our tax clients enjoy that, knowing that they actually have a team that's actually working on their tax return. Because sometimes they don't feel that if they do it themselves or if they go to a paid preparer or something along those lines. I'm going to go ahead and continue back to sharing my screen. Go to the next slide. Take just a moment for that to happen. Okay. So how do we know then who should file, filing status, what's on the return that we need to be paying particular attention to? Well, one of the first things we have to do is to verify identity with government issued photo ID, a social security number, or an individual taxpayer identification number. We learned earlier this week in the IRS quality review training that the government issued photo ID for the primary and the secondary on a tax return, that their government issued photo ID must be current. And they physically have to have it with them. And that can include a variety. It can be a driver's license, a government issued ID. It could be a school ID, as long as there's information and an image on that ID. The Social Security card or the ITIN letter, that can be screenshot and saved on their smartphone, and you can take a look at it. I'm not talking about a list of Social Security numbers or ITIN numbers, but if they actually have a screenshot of a Social Security card or an ITIN letter, you can use that as verification for identity and to start a tax return. Also right away, ask them if they have been issued an identity protection PIN number. That's down here on the bottom of the screen, number 11. It's a yes, no. The return will reject if someone on that tax return has a protection PIN and it's not put in. Now we're seeing more and more people having the identity protection PIN because of identity fraud cases. But this is the top half of the intake, interview, and quality review sheet. They're supposed to put their legal first name, middle initial, last name, the best contact number. They check if they're a U.S. citizen, yes or no. Same thing for the spouse. Why we're asking that, are you a U.S. citizen, is basically for our international students and scholars who are here on specific visas, or other folks are here on specific visas in the U.S. and do not yet have residential tax filing status.
Why did it come back?
Is there a question?
So they sent it to you and faxed it to our own?
Okay, well, let's go ahead and mute our.
Yeah, but this stuff, I think was faxed. It looks like a fax to me.
All right, so anyway, continuing on, and please let's continue to
So if you've
mute.
already done it, we can 75 it.
So as we start to take a look,
It's
they'll
possible that
put
they sent
their
it to you and to our own.
address on, and Anna or Kyla, are one of you able to mute? We want to also know then if they're totally or permanently disabled, or whether a full-time student, they're legally blind. We need birth dates, job titles. We don't necessarily need a job title to do a return, but we can put it in if people have it listed there. And then anyone claim you or your spouse as a dependent return? Always ask that question, even if it's checked yes or no, especially if you get a sense right away that they're a college student and that their parents probably can still claim them as a dependent legally. And then if anything is not checked or is checked unsure, we need to make sure that those all are back to a yes or no. The identity tax related theft, and then an email address. It's not required, but if they want to use that to get contact from the Internal Revenue Service. Now, typically when you see, as a preparer, when you see the tax client, this sheet will basically be filled out, but you need to make sure all that information is there. You do need, even though the greeter has already checked their identity and asked about identity protection PIN, you still need to see the ID and you still need to see the cards or the letters. I apologize, Ms. Enos. A little slow. So we're trying to determine filing status, right? So on the middle of that front page of the 13614C, there is part 2 is marital status and household information. And part 2, number 1, then we're asking them, have they never been married? Have they been married? Yes, no. Did they live with their spouse during any part of the last 6 months? Yes, no. The date of the final divorce decree, that they're legally separated, and the date of the separated maintenance decree. And then here's where language hasn't caught up, but if they are widowed, we need to know the year for that. So that would be that qualified living spouse. And anyway, then there will be dependents that will be listed down below, and we'll come back to that later. But we want to make sure that we know what's going on in part 2, number 1, and then put all kinds of notations on the 13614C, because this becomes part of the quality review. And this helps us make sure that we are completing a complete and accurate tax return. So let's jump in then to filing status and the impacts. The reason why we have to get the filing status correctly is that it impacts the calculation of income tax. It affects the amount of the standard deduction, and it determines the allowance or limitation of certain credits and deductions. Okay. Also, if we have an international student or scholar who's here on a J1 F1 student visa, we want to make sure that they've been here their required number of years so that they can complete Form 1040. If they've not met the requirement of years or other requirements, then they will complete a Form 1040-NR. So typically at a site, the 1040-NR is out of scope unless you have the Foreign Student Scholar certification, which we'd love to have some folks have that, because we do in the neighborhood of 500 to 600 Form 1040-NRs annually. And we see a lot of international students and scholars coming to a lot of the community sites. And sometimes they've got the right information, and sometimes they are misinformed on whether or not they can file as a resident for tax purposes only. So married or unmarried, filing single. So confirm their marital status, and we take their word for this. We're not looking for the marriage license. We're not looking to see the divorce decree, those kinds of things, but we have to ask questions. And typically, taxpayers are considered to be unmarried for the entire year if on the last day of the tax year, they were unmarried, legally separated. Okay? Taxpayers are considered to be married for the entire year if they were married on the last day of the tax year and the spouse died during the year and the surviving spouse has not remarried. Okay? So filing single, not married, legally separated or divorced, or widowed before the beginning of the tax year and did not remarry. Some single taxpayers do qualify for head of household or for qualifying surviving spouse with dependent child status, which also can mean a lower tax for them. We're going to talk about that next week, I believe on Monday. Anna's going to talk to us about dependents. So married filing jointly on the last day of the tax year, they were married and lived together, were married and living apart, but were not legally separated under a divorce or separate maintenance decree. State law governs whether taxpayers are married or legally separated under divorce or separate maintenance decree. Nebraska is not a common law state, so the common law married pursuant to the laws of the state in which they live in. So if we have someone from California, or excuse me, from Colorado, which I believe they're still a common law marriage state. Anyway, they can file married filing joint, even though they are not legally married. Typically, we don't see that. In fact, I don't think I've ever seen that. But some of this is just for information purposes. The married filing separate status is for taxpayers who are married and either choose to file separate returns or cannot agree to file a joint return and want to timely file their tax return. Taxpayers who file as married filing separately each report their own income and deductions on separate returns. So if you have someone in that's saying, I don't want to file with my spouse, they still have to provide their spouse's name and social security number or ITIN for their return, just so that the IRS can see that. And these rules do not apply in community property states, which Nebraska is not. The tax rate is generally higher than on a joint return because they're taking the single standard deduction. Taxpayers cannot take the child and dependent care, education credits, and certain other benefits and credits. So this is something, if they do have dependent children, we have to really let them know that they're jeopardizing their credits. Some credits and deductions, such as the child tax credit and the retirement savings contributions credits, are reduced at income levels that are half of those of a joint return. If a spouse itemizes deduction on their return, the taxpayer must itemize and cannot take the standard deduction. So that's also something I have done a return to where one spouse itemized and took the home mortgage and took a lot of the other deductions, and the other spouse, the taxpayer that we were doing, was left with only state tax paid. So it was really a detriment to their tax return. And so they had a significant tax that they owed both federal and state. I will make a note here. We'll talk about this in January. But in order, if there's the dependent children on that child tax credit, is that we can do an injured spouse, meaning that if one of the spouses owes a federal debt or a state debt, and there's an offset on their refund, anyway, the spouse that's considered to be injured or the one that doesn't have a federal debt can actually file Form 8379 to request that they receive all the eligible child tax credits, additional child tax credits, and any earned income credits. So who is an injured spouse then? Just said must not be legally obligated to pay the past due amount, must have made and reported tax payments such as federal income tax withholding from wages or estimated tax payments, or claimed a refundable tax credit. So you can get more information of who should file in publication 17, and we use Form 8379. And that goes in with the tax return. It takes up to 8 weeks in order for an individual to receive that. All right, we've got a chat question. We're going to get to that. I'm trying to watch my time. All right, filing head of household. They can if they are unmarried or considered unmarried on the last day of the tax year, and they paid more than half the cost of keeping up the home for the required period of time, and had a qualifying person living in their home for more than half of the year, except for temporary absences, such as school or incarceration, different things like that. Now, there are a couple of things we want to think about for qualifying persons. Is that if their income is below the single standard deduction filing limit, we may want to file them single with the dependent. Head of household is one of the most misused filing statuses, and a lot of times it is something that is internally audited by the Internal Revenue Service. Oh, excuse me. So a qualifying child who is single, a married child can't be claimed as a dependent parent, a qualifying relative who lived with the taxpayer more than half the year and is one of the relatives listed on the chart, and can be claimed as a dependent by the taxpayer. Okay, so here's the chart that we alluded to. This is in your 4012 guide under tab B, page 14. There is also a litany of ways that it can be viewed, or there's different qualifications. So this is a chart that you want to be familiar with as well. So if the person is your qualifying child, such as a son, daughter, or grandchild, or lived with you more than half the year and meets certain other tests, they can be a qualifying relative who is your father or mother. They can be a qualifying relative other than your father or mother. And then they go in here on that one. Basically, when we look at these things, it can be someone who is related to you, but cousins. If they're at that cousin level, then that is something, an individual you cannot use as a qualifying dependent or relative. There's a very exhaustive list. This was that footnote section that I visited with you about. I would just get into that chart and then also take a look at the footnotes, because the footnotes really tease out some of the situations that we have at a tax site. Okay, the qualifying surviving spouse. Key thing is there, if there are dependent children involved or dependents involved with this, the surviving spouse can take 2 years of claiming as married filing joint. That's the important thing there. But in order to do that, after the year that the spouse died, they can only take married filing joint 2 years after that if there are children that are claimed on the tax return. The decision-making tree, I love this, especially if you can't get to sleep at night. This is a fun little chart to look at and to work your way through. This this page will be worn out in your 4012 guide, or if you have a paper copy of this, because we're constantly going through this. And so, were you married on the last day of the year? If I answered yes, I go over to the right-hand side. Did you and your spouse live apart all the last 6 months of the year? If I answer yes, then do I meet all of these requirements? And if I answer yes to every one of those bullet points, then I do qualify for head of household. But notice there was a footnote on this one, number 8, we would want to check out. If I did live with my spouse for any part of the last 6 months of the year, then I'm probably going to be doing married filing jointly or married filing separate. Okay. If I answer no to any of those 4 requirements in the box to the right side middle section, then it's a no, and I'm married filing joint or married filing separate. If I was not married on the last day of the year, and my spouse, I had a spouse and that spouse died during the year, then I can do married filing joint or married filing separate. Which one is more advantageous? If no to that question, then do all of the following apply? I read through that list. If I can answer yes to all of those questions, then I'm a qualifying surviving spouse. If I answer to no to any one of those above statements, and then if I do both of the following apply? If no, then I'm filing single. And then yes, to the last box in the lower left, I can apply as head of household. Those are the split votes. There's a handy dandy worksheet in there for cost of keeping up a home. So sometimes people want to go, I don't understand what that concept is. Well, you can show them this page, you can get out a piece of paper, and you can work through on who is paying for what. Some out of scope pieces on here. We cannot work with joint liability as an innocent spouse. Depending upon your tax assistance program, married taxpayers who wish to file a separate return from their spouse and are subject to community property tax laws, that is out of scope. Taxpayers who are not certain they are in a common law marriage, they need to check on that. And typically in Nebraska, that is out of scope for us because we are not trained for the complexities of common law marriages from state to state. We can file more than the Nebraska state return, but we do so with extreme caution because we want to make sure that we're doing the subsequent state returns correctly. All right, some questions here to go through, but what I'm going to do is I'm going to stop sharing. We have about 10 minutes left. And anyway, Kyla, have you had a chance to look at our chat question? And is that something we'll be covering in an upcoming seminar?
Linda, I actually sent that to you in a private message because I
Oh!
didn't want to
Oh,
interrupt.
Joanna, I'm so sorry.
That's
I'm so
okay.
sorry. Well, anyway, you know what? That Kyla can't see that question. So
Yeah.
Joanna, I'm so sorry. I was like, spacing it off. But yes, I will visit with Kyla and we'll get you an answer to that.
Awesome. Okay. Thank
And
you.
I think that is coming up in one of the
Okay, great. I
next
just didn't
couple-
want to forget, so I thought I would say something real quick or message you real quick. So that's awesome.
No, and I appreciate that. Okay, so questions about who should file, filing status, and how we come up with the filing status.
I have a question.
Yes, ma'am.
So on the determination of filing status on the chart, where it says start here, were you married on the last day of the year? So if someone gets married, let's say, just for the example, on December the 28th, but that he wasn't living with the spouse the whole year, so he was apart for the last 6 months of the year, they can still file joint?
Yes.
Okay.
I know I said that really quick, same way, but yes.
Because the chart says, did you and your spouse live apart all of the last 6 months of the year? So if they get married end of December, let's say 20th of December, so they weren't married before that, they were living separately, they could still file marriage joint for the whole year of 2022 because they got married before the year ends.
That is
Okay.
correct, yes.
Perfect.
That's a good question.
Thank you.
Yeah, good question. Other questions? And sometimes we're able to answer that question so quickly because every year we see that. And so we know. They do have the option of doing, well, there's lots of things that go into that, not to really get things convoluted. But if you do have qualifying relatives or dependents, and Kyla, correct me here, and Anna, if I'm wrong, they do have an option. A parent can claim a child who did get married on their tax return. If they can legally do that. And legally, I mean, if they meet all of those qualifications. Anna's smiling. This is not good. I was saying, stay on script. Dr. Moody, stay on script. Other questions or comments? Now, a lot of you, while you're thinking of your questions and comments, you bring in a specialty, right? That you have additional kinds of trainings. So I know we have someone who works with legal. I know we have some property tax credit folks. I know we have some auditors and those kinds of things. When we do the tax return and we're using that intake and interview sheet, we do have to ask some tough questions. And sometimes we will get a sense that maybe someone is not being completely honest with us. It's not our place at this point in time to put on like an auditor cap or on a legal cap. But what we do want to caution is to say to them, I'm not sure we're doing a complete and accurate return. And if you sign off on Form 8379, you're taking full responsibility of your tax return, and you're committing fraud by signing that you have prepared an accurate and a complete tax return. So that does protect you, especially if you get a sense that maybe something is not quite right. And we will see that from time to time. A lot of what we've seen, we have weeded out. I hate to use that term, but site coordinators do talk, and we do have taxpayers who shop our sites to find somebody who will go ahead and do it. But always, if you're not certain and it's not the time or the place to put on that revenue cap, then you can talk to your site coordinator. You know, you can say, golly, I think if you did it this way, you might get audited, and that's not going to be pretty. But at the same time, you do not have to tell anyone you're from the Nebraska Department of Revenue, or you're from the Internal Revenue Service, or any of those kinds of things. So we try to be as impartial as we can be, and we rely on our training. And knowing then that the system will probably pick up on those inaccuracies and the people who are not being completely honest. You know, oh yeah, I only worked 5 jobs, not 7, because they want the tax return done. They're going to get a notice from both the feds and the Nebraska Department of Revenue. So that's just one little caution that I wanted to bring out. But I do enjoy, though, when I hear the revenue come out in folks and the IRS person come out in folks, when they can sense that someone is not being truthful or honest. I hope that made sense.
Yeah, perfect
Other-
sense.
Thank you, Sinway. Other questions? We have about 3 minutes left.
Just a comment.
Yes, ma'am.
For especially for the new VITA volunteers, at the beginning, it might seems like it's a lot of information to determine the filing status, because determining the filing status has a lot of tax consequences. But when we look at the chart, it really is kind of the big picture and the easiest way to go about it. And when you're not sure about the situation, remember, you're never alone at the site. You always have other volunteers with you. You have your site coordinator, Linda, Kyla, Anna are, really available and well-trained to answer your questions. So everybody's on the same boat. Everybody's here to help each other. So it's kind of a, I say a VITA family. So don't feel lonely or too shy to ask questions when you aren't sure about something. We're all here to help each other.
Exactly. Sinway, thank you so much for that. That was well stated. The other thing I do want to let you know is that you are protected underneath the Volunteer Protection Act of 1974. You are volunteers. As long as you are performing tax law under your certification, then you are protected. So if someone does, lie to you, and there's something missing from the return, as long as you were within scope, you are protected. If we transmit that return, that individual, that taxpayer must sign off on the 8879. That's after the quality review. And when they sign that, it takes the burden off of us as taxpayers, and it puts the burden on the taxpayer for the accuracy of the return. So in kindness, if someone does get a letter from the IRS or the NDR, we will help them with the response and how to do that. But it takes you completely out of that scenario. In fact, your name is not associated with the return. It's going to be Anderson Library, and there's going to be a site ID number. It's going to be UNL Tax Credit Campaign, a site ID number. And so what the cool thing about that is that there's a greeter who does do some screening for us. There's the intake, interview, and quality review sheet that we use. You prepare the return, and we want you raising your hand. I know at UNL Tax Credit Campaign, you might have to wait a few minutes for someone to get over to you, but most of the people who come to VitaSites have been there before, and they expect that if there's a question. So there's that piece of it. When you're done with the return and you think you have everything entered in and you've gone back through your intake sheet, then you're going to request a quality review. And so someone else is going to take a look at all of the information as given. That's why it's so important for you to write notes on the intake and interview sheet, so that you can point them out, or, the quality reviewer can say, Anna, did we get this question resolved? And Anna's going to tell me yes, or she's going to say no. And then the site coordinator and I will, we'll say, well, this is as far as we can go until we get this resolved. So someone always has your back, which I think is one of the beautiful things about this particular program, and why I really enjoy Lincoln Vital, because we've really built a community with the volunteers and between the sites, because we enjoy what we do, we enjoy each other, and we want to make sure everybody is successful. So thank you. Well, we're at 1:01. If you have questions, please email us. Before we go today, I will put my email in chat. Anna, Kyla, why don't you put your email in chat?